Romeo Power stock analysis. Okay, so in this video, guys, we're going to talk about Romeo Power, which is going to go via a merger by the end of this year in another SPAC deal with RMG acquisition. So as you can see here, guys, the stock is around almost $24 as of making this video. So it's up pretty nicely from the $10 price point. But I think there's a lot of upside in this company. So a lot of people are calling this company the next Tesla simply because instead of selling cars like Tesla or instead of charging vehicles like ChargePoint does, it actually provides the battery pack for a lot of these electric vehicles, guys. So let's get right into it, talk a little bit more about this company, and then I'm going to go into the investor presentation and give you guys my long-term price target. So as you can see here, I'm on the website. So like I said, guys, I am not an engineer, so it's going to be this analysis is going to be more based on the fundamentals of the company than the actual technology. But from what I've been grasping from doing a lot of research on this company, it is, to put things bluntly, it is basically it's like selling pitchforks and axes. So I talked a lot about why I like ChargePoint simply because you don't really have to guess which electric car company is going to do well. And I think it's the same thing with Romeo Power. So they are a major player, arguably the world's largest EV battery company, at least in the North America. And they're doing this SPAC deal simply because there's a lot of long-term growth in this company. So the shares are already at around $24, and we kind of saw that same aggressive movement with ChargePoint. So I think that this stock is very much in play. And also, this company has landed a lot of contracts, over 500 million in contracts, with a potential of 2 billion or so that are currently in talks. So the guys that keep this video on the shorter side, I just want to quickly go over what they do. So basically, as you can see here, they produce batteries. And the reason why this company is in such a good position is because, as you can see here, Romeo Power is an energy tech company that designs, engineers, produces energy-dense, commercially available lithium-ion battery packs, and they're 115,000 square foot 8 gigawatt factory in Southern California. So the company's been around for just 5 years, so they're just basically getting started. And one of the nice things about this company is simply because they're going to be powering a lot of these commercial vehicles. So let's head over into the investor presentation to give you guys some more details. Okay, so here we are in the investor presentation. So this is really interesting company. Actually, I give you guys a shout out. I learned about this company in the comments. I've basically been focusing most of my attention on EV, car companies and things like this. But actually, it does make sense that the people selling the batteries are going to do really good as well. So as you can see here, let's take a look at some of their customers. So we have John Deere, Nikola Motors, BMW, or some of the more prominent names. And then basically this company is basically servicing a lot of these newer companies that are starting up and going to help provide them with the batteries to power their vehicles. So as you can see here, guys, the total equity value of this merger is supposedly around 1.3 billion, but obviously that market cap is going to go up because the stock is already up to around $24 or so. And this company is basically says that they're extremely cheap, that they're trading with a 1.3 times enterprise value to 2023 revenue. So I'm going to go into that a little bit further, guys. But right now, I just want to quickly go through this presentation. So one of the things that kind of stood out to me when I was taking a look at this company was two things. So number one, the contracted revenue. So as you can see here, to make it a point, the company already has 544 million in contracted revenue and is working on just up to 2.2 billion under advanced negotiation. And the second, so obviously, a lot of people are talking about whether the SPAC stocks is going to be like a SPAC bubble or something like that. But anytime you have contracted revenue and the potential for $2 billion or more, that means that there's a lot of demand for these batteries. And as I talked about in previous videos, you guys watching my ChargePoint videos and Tesla videos, stuff like that, EVs are only going to increase. This is the first inning. So every single electric car is going to need a battery to power it. This is one of the things that Tesla has talked about so much. This is one of the things that Tesla's talked so much, working on reducing the battery costs. And this is what kind of separates EV vehicles from gas guzzlers, the battery. So the battery is a key part. It's just like your cell phone. It's just like your computer. A strong battery is critical to basically the EV electrification movement, taking place. And as you can see here, they have a ton of engineers from these amazing companies. So they've handpicked engineers from Tesla, SpaceX, Bosch, GE, Amazon, and Apple. So these are obviously some of the best companies in the world. I mean, you've got Apple, Amazon, and Tesla. Those are like some of the top stocks that you could have purchased over the last 10 to 20 years. And now they've kind of handpicked these guys and put them all together under this new company. So this company has an awesome team of people. It's just under around 80 to 90 total employees. So it's a little bit small, but they're growing, and this whole spat will really help them grow even further. So the kind of the differentiation between this company, it's really focusing on the commercial vehicle market in North America and Europe. And they say that there's a $225 billion market opportunity, and they plan to be the leader. So as you can see here, it says order book with customers representing 68% market share of the Class 8 truck market in North America. So guys, in terms of these larger haul trucks, apparently Romeo is the dominant player. So as you can see here, let's talk a little bit more about how the company was founded. So the company was founded, it started in like 2015, 2016, and it was founded by former employees of Tesla, SpaceX, Amazon, Apple, and Samsung. Okay, now they have just about 100 employees and around 60 plus engineers. And take a look at some of these projections. As you can see here, they're projected to do over $1 billion in revenue by 2024. So, okay, so let's take a quick look at some of these batteries. So basically they're dealing with around 3 different types. They have the Romeo Iron Pack series, the Romeo Apollo, and the Romeo Hermes. And they're basically focusing on basically bigger vehicles. So as you can see here, there's a picture of the potential electric UPS van. And then we have a bigger, like a semi type truck. And then trucks or buses. So the fact that they're targeting commercial trucks makes sense, simply because they're not trying to compete with some of these people that are producing passenger cars and things like that. They're focusing on commercial companies, and because commercial companies like Nikola and companies like Workhorse and things like that, they desperately need batteries to fulfill these orders, because they have so many pre-orders. Like Workhorse, it's pre-orders for all these vans and things like that. So this company is basically going to partner with other companies that are launching commercial EV vehicles, and they're going to sell them these batteries. So as you can see here, the company also has been invested in by BorgWarner. So BorgWarner is kind of a European EV company, and they did around 14 billion in sales last year. So the fact that there's other companies investing in Romeo as well, they also have partnerships with Samsung, Texas Instruments, and LG. So far, guys, everything just looks really good about this company, and I just think it has a lot of long-term upside. So now, guys, I don't want to talk too much about the actual product itself. I want to talk more about the fundamentals of the company. So let's just head. Okay, so now let's talk financials. I'll give you guys my future price target. So one of the things that stood out to me in this presentation was simply that they're projected to do around 60% compounded annual growth. And that's phenomenal. That's basically on lines with companies like Tesla and things like that. They already have, as I can say, over $500 million in contracts through these companies that are going to be producing their own vehicles, and I just expect growth to take up from here. So this SPAC stock, around $24, could seem a little bit expensive now. It's already run up obviously like 100% or so, but as with ChargePoint and companies like Tesla and all these companies are going to continue to make a lot of money into the future. This is just the beginning, and we've had so many headwinds this year from the whole pandemic situation. Once the vaccines are released and things start to go back to order, I think you're going to see EV adoption ramp up even much quicker. Okay, guys, so you can actually check out the rest of this presentation on Romeo Power and go to their investor.com and go to investor relations. So kind of keep this video on the more brief side. I'm just going to go over it straight to the transaction details. So they agreed to this on October 5th, and this should close probably by the end of the year. That's my guess. The company is going to trade under the ticker symbol RMO on the New York Stock Exchange. So if you buy RMG, your shares will automatically change from RMG to RMO. You don't have to do anything. Just make sure you buy the SPAC before the merger. And as you can see here, there's going to be a combination, just like most of these SPACs. So the company plans to receive around 350 million through the SPAC merger to kind of, fund their operations and stuff like that. So let's take a quick look at actually what we're looking at in terms of long-term revenue. So as you can see here, long-term revenue plans to hit over $1 billion by 2024, and they're expecting positive margins to expand to around 20, EBITDA margins to expand to around 20% by 2025. Guys, like I said, I wouldn't overthink it with this company. All of these electric companies, especially the top ones, so the market leaders, these companies are going to grow substantially from what they're currently valued. So let's give you guys a current value of this company as if the market cap were to go, if they were to go public today. So as you can see, once the deal is complete, they'll have around 134 million shares. So this is obviously, they proposed that the company is worth 1.3 billion, but obviously since the shares have jumped up to around $24, that means that this company is currently sitting at a market cap of just around 3 billion, right around there. And the fact that the company plans to make around at least $1 billion in revenue by 2024, that would kind of put this company, if you were given a conservative price to sales ratio of, like, for instance, Tesla is selling at around like 17, 18, let's say 10 to 15, then that means that this company is potentially going to grow into like a 10 to 15 billion dollar company. Probably it's going to grow much larger than that. Like I said, I like to be conservative with these numbers, and we've seen a lot of these EV stocks traded super high price to sales ratios, but this company is at least has at least 3 to 4x upside, assuming that the company is able to hit those revenue numbers. So, guys, I think this is a pretty straightforward buy, very undervalued. And, obviously it's going to take some time to hit those revenue numbers. But if you're buying into the SPAC right now, obviously your shares are going to be worth a ton more in the future. And that's what we're really looking at, guys. We don't know exactly where the stock is going to go day to day. It might go up, it might go down. And I think a lot of people, I've been reading your comments, a lot of you guys are worried about the day to day price movements. And the important thing to realize is that, you own shares and potentially one of the largest battery companies in North America. Like, don't let the day-to-day stock prices worry you so much. What you want to do is you want to look at kind of monthly, quarterly, and annual price movements. So to give you guys an example of what I'm talking about, let's head over here. Okay, so if we take a look here at TradingView, TradingView is really good for visualizing. As you can see here, the stock actually absolutely started taking off, and now it's headed up to 23 or so. So what it's important to do is, if you're looking at like the day-to-day movements, it was 18 and it dropped to 15 and things like that. But over the long run, it's going up. So that's what's really important. We're not really worried about day-to-day. If you're swing trading these types of stocks, and obviously you're worried about price movements, but I think the important thing to realize is with this whole EV movement, it's so important to be a long-term investor, because you don't want it to be like 2022, 2023, and you're looking at some of these stocks and they're trading in the hundreds of dollars, and you're just thinking like, why didn't I buy it? It was just, it was so straightforward. More people are going to be using electric vehicles, not just passenger cars, but trucks, buses, vans, school buses, delivery vans, just everything. You've even got out here 3-wheeled electric vehicles, semi trucks, tractors. So I wouldn't focus too much on the day-to-day price movement. I would buy, get in, and when you see the price dip, I would add to my position. So as you can see here, when it was at 18, then dipped down to 15, that was a nice buying opportunity. Then it went back up to 18 and dipped down 16 again. So buying on dips is good, because over time you're going to get a lot more shares for cheaper price. In the short run, you won't see the difference, but in the long run, buying on dips will add a lot of shares to your account, to your brokerage account, at a much cheaper price. So that's what we're really trying to do, guys. We're trying to build as many of shares as possible in these companies, and then sit back and let management do their job. So that's how you're going to make a lot of money in these companies like this, as long as they're living up to their potential in terms of generating revenue and returning value to shareholders through earnings and profits and things like that. So that's it, guys, to wrap this video up. I hope you enjoyed this video on RMG group turning into Romeo Power by the end of the year. Really interesting company, and I would say that it's definitely seems like it's in the class of Tesla and ChargePoint. So if I were to give you guys probably the top recommendation in terms of passenger vehicles, I would definitely choose Tesla. If I would give you guys the best charging station stock, I would say ChargePoint. And give you guys the best battery EV stock, I would say Romeo Power. So if you enjoyed this video, guys, please smash the like button and hit the red subscribe button to receive more videos from me. And also, if you want to know which stocks I'm looking at Monday through Friday, please subscribe to my daily stock watch watch list newsletter by clicking the link in the description below or going to investortrip.com/newsletter. So that's it until next time, guys.